When fear attacks your trades, you don't panic, you transform. Today, I'll show you how to trade with strength, clarity, and unshakable discipline. Let's unleash the fearless trader inside you. Understanding the root of trading fear. Fear in trading comes from uncertainty, the feeling that you might lose money, be wrong, or miss out. Before trusting any plan, you must understand what triggers your fear. Fear of losing capital. Fear of missing out, FOMO. Fear of being wrong. Fear of entering too early or too late. Fear of overtrading or undertrading. Your first mission is awareness. A trader who knows their fear can manage it. A trader who ignores fear becomes controlled by it. Building a trading plan. You can actually trust building a trading plan. You can actually trust. A plan is not just entries and exits. A real trading plan includes market conditions you trade, your strategy rules, risk per trade, your stop-loss placement, your take-profit logic, maximum trades per day week, when not to trade. The reason most traders fear executing a plan is because they don't have one. You cannot trust what you haven't built. How to test your plan until fear disappears. How to test your plan until fear disappears. Testing builds confidence. Confidence reduces fear. Here, how to test. Backtest at least 5,100 trades. Forward test on demo for 2-4 weeks. Trade small real money after that. Every round of testing makes your plan more real. You begin to see your win rate, your average loss, your average win, your maximum drawdown. When you know these numbers, your emotions calm down. Setting risk rules that remove fear. Setting risk rules that remove fear. Fear usually appears when risk is too high. Here is a clean, proven risk model. Risk 1-2% of your account per trade. Never increase risk after a loss. Only increase risk after a profitable week. This rule alone makes trading more stable. The power of pre-trade checklists. The power of pre-trade checklists. A checklist removes hesitation. Before entering any trade, ask, does this match my strategy setup? Is the market trending or ranging? Is my stop-loss logical? Is the risk to reward acceptable? Am I entering out of fear or excitement? Following a checklist reduces impulsive decisions. How to execute trades without fear. How to execute trades without fear. Execution becomes easy when you accept losses as normal. You risk a small amount. You follow your rules strictly. Pressing the button is not the problem. The problem is the fear attached to it. Reduce fear by staying consistent, avoiding emotional entries, entering only when rules align. How to trust your stop loss. How to trust your stop loss. You place the stop loss for a reason. Moving it means you're breaking trust with yourself. Trust your stop loss by placing it based on structure, not emotion. Planning it before entering. Accepting that a stop loss protects you. A trader who moves stop losses invites chaos. Avoid overthinking after entering. Avoid overthinking after entering. After entering a trade, don't stare at the candles. Don't analyze again. Don't panic when price moves slightly. Let the trade breathe. You did your job, now let the market do its job. Journaling to remove fear permanently. Journaling to remove fear permanently. A journaling system builds mastery. After each trade, write why you took the trade, what went right, what went wrong, whether you followed your plan. This habit helps you trust yourself, and a trader who trusts themselves has no fear. How to rebuild confidence after losing streaks. How to rebuild confidence after losing streaks. Losing streaks are normal. Here, how to recover. Reduce risk temporarily. Revisit your winning trades. Evaluate if you still follow the plan. Don't revenge trade. Rebuilding confidence is about returning to structure. The psychology of trusting your plan. The psychology of trusting your plan. Trust is built through repetition, evidence, consistency. When your trading plan shows results, even small ones, your fear fades. The difference between good fear and bad fear. The difference between good fear and bad fear. Good fear keeps you disciplined. Bad fear keeps you paralyzed. You eliminate bad fear by having rules. You keep good fear by respecting your limits. Summary: become the trader who trades without fear. Summary: become the trader who trades without fear. By the end of this video, you should understand. Fear is normal. A tested plan destroys fear. Risk management gives confidence. Checklists reinforce discipline. Execution becomes easier with repetition. This is how you become a fearless trader. Extended Practical Mastery Chapter: Eliminating Fear Through Deep Understanding. Trading confidence is not built in a day. It is built through thousands of small, disciplined decisions that slowly reshape your mindset. In this extended section, we go deeper into practical, real-world principles that help remove fear permanently and develop the kind of mental strength professional traders rely on. Why fear persists even when you have a plan. Fear stays alive because your brain reacts to uncertainty and risk by assuming danger. This is normal. Your brain is wired to protect you. But in trading, this protective mechanism works against you. The goal is not to eliminate fear as an emotion, but to eliminate its power over your decisions. Fear remains when your plan is not fully tested. Your risk is too high. Your expectations are unrealistic. You overconsume information. You lack structure. You have no historical evidence. Understanding this helps you build a mental foundation strong enough to trust your process. Developing evidence-based confidence. Confidence in trading should never come from motivation alone. It must come from data, your own data. Evidence builds trust faster than anything else. To develop evidence-based confidence, track all your trades. Categorize setups. Note emotional state before entering. Measure every win and loss. Review weekly patterns. The more evidence you collect, the more you see your system work in the long run. The role of small wins in building long-term trust. Small wins compound your belief. Every small, disciplined victory strengthens the mental connection between your plan and your results. Over time, this reduces fear dramatically. Small wins include following your plan even when tempted, taking only high-probability trades, respecting your stop-loss, walking away after a planned session, closing early when your strategy demands it. These actions appear minor, but they are the seeds of a fearless trading mindset. Why risk exposure determines your emotional state. Most fear in trading comes down to one thing: exposure. When you are overexposed financially, your emotions naturally intensify. To control exposure, lower risk per trade. Use consistent lot sizes. Avoid stacking trades without reason. Never risk more after a losing streak. Your psychological comfort zone matters as much as your strategy. How structure removes emotional chaos. Structure is the backbone of emotional stability. Without structure, every candle feels like a threat. A strong structure includes clear session times, fixed trade count, define market types you trade, routine pre-trade preparation, daily execution rules. When structure exists, fear has no room to influence decisions. The importance of accepting uncertainty. Many traders fight uncertainty instead of embracing it. Trading is built on probabilities, not guarantees. Accepting this truth removes a massive emotional burden. To accept uncertainty, focus on process over outcome. Think in probabilities, not predictions. Trust long-term patterns over single trades. Measure success by execution quality. Acceptance brings peace in the middle of volatility. How to maintain discipline in fast-moving markets. Fast markets can provoke emotional reactions, but trained traders remain calm through structure and preparation. To stay composed, pre-plan scenarios. Avoid emotional chases. Use alerts instead of starring. Let setups come to you. This prevents fear-driven, impulsive entries. Why trading less often increases confidence. The fewer trades you take, the more control you gain. Fear decreases when you stop forcing opportunities. Trading less gives you more clarity, better focus, higher quality setups, reduced randomness. Quality is the antidote to fear. Becoming a trader who trusts their system automatically. Over time, your system becomes second nature. You stop questioning every candle because you know your role to execute, not to predict. You trust your system when you see long-term results. You execute rules without hesitation. You detach from individual outcomes. You review your plan consistently. This transformation eliminates fear almost completely. Trading psychology, mastering your mind. Successful trading is as much a mental game as it is technical. The charts, strategies, and indicators matter, but without psychological mastery, even the best plan will fail. Understanding and controlling your mind is the key to trading without fear. Understanding emotional triggers. Traders often underestimate the power of their own emotions. Fear, greed, frustration, and overconfidence can all distort perception and lead to impulsive decisions. Recognizing emotional triggers is the first step. Fear arises when the unknown appears, like sudden market movements or unexpected news. Greed appears when profits look promising and push traders to overextend. Frustration comes after consecutive losses, leading to revenge trading. Overconfidence occurs after a winning streak, tempting traders to take trades outside their plan. By understanding these triggers, you can prepare strategies to respond rationally instead of emotionally. The role of mindset in risk management. Psychology and risk are inseparable. If you fear losing, you risk too little or too much at the wrong time. If you are overconfident, you ignore rules and risk management. The mental discipline to accept losses as part of the process is crucial. Each trade is an opportunity to execute your plan correctly. A loss does not define your ability, your reaction does. Consistent small losses are part of the system, not a personal failure. Mindset controls how effectively you apply your plan under pressure. Cognitive biases that impact trading. Being aware of common cognitive biases can prevent unnecessary mistakes. Recency bias, overemphasizing the most recent trades and ignoring long-term statistics. Confirmation bias, only seeing information that confirms your pre-existing beliefs. Loss aversion, reacting more strongly to losses than gains, causing fear-driven decisions. Herd mentality, following the crowd instead of your own plan. Training your mind to recognize these biases allows you to trade more objectively and trust your strategy. Building mental resilience. Mental resilience is what keeps a trader disciplined during drawdowns or unexpected events. To build resilience, develop a consistent routine that includes preparation, execution, and review. Keep a trading journal to reflect on decisions, emotional states, and outcomes. Practice mindfulness or meditation to maintain focus under stress. Visualize following the plan successfully, even when fear arises. Over time, resilience reduces the impact of emotional swings and strengthens trust in your plan. Turning fear into a signal. Fear is not always an enemy. Experienced traders learn to use fear as a signal for discipline. Fear can indicate risk is higher than usual. You are considering a trade outside your plan. The market conditions have changed. By responding to fear with a review of rules and structure rather than panic, you convert a potentially negative emotion into a tool for smarter decision-making.